So this is the fourth example in this video series where I am doing the base quality analysis because I realized that a lot of my YouTube subscribers need to get very good at technical analysis. Okay. Liquidity analysis, comparative, fundamental, and market analysis is easy to do. There is not much to check in that. It's just data, facts. But technical analysis is more visual. You have to get a feel of the chart. So I wanted to spend time on understanding the quality of a base to help you understand the quality of the base. So we have already done three examples. In this, we will look at Cochin Shipyard. And in all of this video series, I am using old charts as per the SEBI regulations. I cannot show you the latest uh, charts, latest 3 months data. So we will use old data to study the bases and how they have done in the past. So this is May 2024, many months ago. So we can use this chart as per the regulations. Let us do a base quality analysis of this. Okay. So this is Cochin Shipyard. This is the acute little base here. So what is point one? The high of this candle is 1377. The high of this candle is 1378. So that is base. That is point number one in the base. So let me first draw the base. Okay, that's the base. I like small bases. Okay. So base quality analysis. Is the price above all the three moving averages? Yes. The current price is above the blue, green, red. Yes. Is the price within 25% of 52-week high? Yes. So this is 16th of May 2024. If we go to 16th of May 2023 here, somewhere here, what's the highest price? This. So that's the 52-week high. What's the distance from the 52-week high to the closing price? 2.53%, right? So it is within 25% of 52-week high. How many candles in the base? 11 candles. So I click here, go to the candle which creates point one. I click here, go to the latest candle, that's 11 bars. So 11 candles in the base. How many do we need minimum? We need 10 candles in the base. Number of points, 4. This is a no-brainer. Point 1, point 2, point 3, point 4. Correct? 4 points in the base. Buy point is in the green zone. Fantastic. This is buy point. The high of this candle is 1370. Let's draw that. 1370. See, the moment you draw this yellow line, immediately you can draw the other 4 lines. What are the other 4 lines? Well, first line is 1% above the yellow line. So 1370 multiplied by 1.01. That's 1383.70. So 1383.70. 1383.70. So that's the buying range. The next line is 8% below the first yellow line. So this is 0.92, like 92% of 1370, which is 1260.40. So 1260.40. That's your stop loss. Here is the stop loss, 8% below the first yellow line. Then you need to draw the targets. First target is 20% above the first yellow line. Second target is 25% above the first yellow line. So 1370 multiplied by 1.20, 1644. It's exact 1644. Okay, no decimals. So that's the first target, 20% above the first yellow line. Then second target would be 1370 multiplied by 1.25, 1712.50, 1712.50. 50. So this microphone is coming in between, so I cannot see my keyboard, but that's fine. I got a small keyboard, so it's not much inconvenience. If I remove this microphone, then probably the sound wouldn't be great. Okay. Yes. So you now see the selling range, the stop loss, the buying range. Okay. Next. So buy point closing price in the green zone till now fantastic, no falling window. Mother baby candle, yes. Look at these two candles, mother baby. Favorable candle 50% plus, yes. We go to the bar chart. Okay. Let's see what we have here. So let's count the red candles. One, two. This one we cannot count because it has got high volume. So one, two, three, four, five. And this one we cannot count because it has got high volume. This one we can count high volume up closing. So six. So six candles in our favor out of 11. Six candles in our favor means there are five candles, I think five red candles, which are at low volume. Sorry, five bars which are at low volume. Let's look at that again. So I think this one, yeah. Let us skip the candle that creates point number one. Okay. Let's take these one, two, then three, four, five. Five red bars, which means five down closings on low volume in our favor, one up closing on high volume in our favor. So 6 out of 11 are in our favor. So more than 50% of the candles are in our favor. So I am looking for up closings on high volume, which represent institutional buying. I am looking for down closings on low volume, which represents non-selling of by institutions. Okay, institutions are not selling. This is up and down closing. Strong and weak closing is a different concept. You can use that concept here if you want. Strong and weak closing pertains to the same candle. So if that candle closes above its own midpoint, that's a strong closing. If the candle closes below its own midpoint, that's a weak closing. Then again, there are combinations like strong closing, high volume, strong closing, low volume, weak closing, high volume, weak closing, low volume. I have already made a separate video on that. The thumbnail would be candle volume or candle analysis or something like that. You can check that video. It was not made very long ago. It was a recent video. Okay. So favorable candles, I convert it to a bar chart because I'm only interested in the closing price. Shakeout, there doesn't seem to be a shakeout here. Okay. It just kept coming down. Doesn't seem to be a shakeout kind of. Base height is B. That means 10 to 20% distance from, let's say, this price to this. That's 15.24%, which means grade of the base is B. Green zone closings, three candles closing inside the green zone, fantastic. Less than 5% distance to buy point. So from closing to buy point, it's 2%. Fantastic, very tight base. Upward sloping moving averages, yes. So how many are not in our favor? See, no shakeout. That's the only thing which is not in our favor. Rest everything is in our favor, right? Green zone 4 points is fine, no problem. So this is a fantastic base. Okay, this is like 13 points are in my favor. And by the way, during this time, I checked before making the video. The market condition on 16th of May was uptrend under pressure, which means we are allowed to take positional trades. And I also checked for Cochin Shipyard at that time, consolidated numbers, 3 quarters of accelerated EPS growth, 3 quarters of accelerated sales growth. Do you know what was the sales growth at the time? So this is May. So March numbers were already out. We were waiting for June. So EPS growth at that time, before it broke out, 229%. Sales growth at that time, on that day, before it broke out, this is reported sales growth, okay? 114%. Triple digit EPS growth, triple digit sales growth. Look what happens to the stock. in 3-4 candles, it's done. It's inside the selling zone. Okay, 20-25% target achieved. So even though the market was in uptrend under pressure, remember what we have discussed. When the market is in a confirmed downtrend, we are not allowed to take a swing trade or a positional trade. But when the market is in confirmed uptrend under pressure and rally attempt, we can take a trade. When the market is in uptrend under pressure, as in this case, we are only allowed to take positional trades. And by the way, at that time, the relative strength was of this stock was more than 80. Okay. So fantastic breakout. Let's continue the price further. See, continued to go up before it started to collapse, because after that, after this, the numbers really came down. It went into negative EPS growth. But before that, the target was achieved in a very short period of time. I think the stock shot up like 50%. Okay. That's too extended. If the stock goes up 50% without forming a base, okay, if the stock extends more than 25% without forming a base, chances are very high that it is going to come down. It probably too extended. Okay. So nice breakout, tight base, good numbers. I think liquidity analysis was good. Everything was fine in this case. So good example to study. We have to study previous examples to, these are called precedents. Okay. Precedents. So when we study precedents, we get confidence. So that is why I am doing base quality analysis for you. Learn this technique. It is very, very important. Once you understand these 14 points, you will become very good in technical analysis, which is specific to this strategy. This is not applicable to any other. Like, don't apply this to Forex or commodities or intraday or lower time frame or things like that. This is specific to stage 2 confirmed uptrend stock analysis. Okay. So that was my analysis of Cochin Shipyard. We will look at more examples of base quality analysis. See, the tighter the base, the more powerful the breakout. I think here it was base number 3 or maybe 4. So it was late. It had gone beyond one or two, base 1 or 2. So that is something which I'm not checking in these videos. That is something that you have to check when you're taking the trade. You have to follow the orange trading system. You have to do liquidity analysis. You have to do comparative analysis, technical analysis, fundamental analysis, and market analysis, and then take a decision. This is only a part of technical analysis. Beyond this, there is base count as well. Okay. Beyond this, there is relative strength, blue dot as well. We also want to see whether the relative strength line at that time was displaying any blue dot or not, whether the relative strength line was at a 52-week high or not. We have to check those things as well. So this is not full technical analysis. This is part of technical analysis, but this is like 75 to 80% of all technical analysis comes here. Okay. This simple technique alone will at least control a lot of losses in your portfolio. I mean, for me, it really doesn't make sense to be in a stock which is trading below its 50-day simple moving average. Okay. We want to be in stocks which are near their 52-week high. We want to be in stocks where the price is already above the 50-day, 150-day, and the 200-day. We are putting the odds in our favor. We are only buying stocks which are in a confirmed stage 2 uptrend as per Mark Minervini's book. Okay. Thank you so much.